So as we head into this holiday weekend, not a lot to report on the mortgage or the housing front. Rates continue to remain relatively flat. Of course, a couple of weeks ago, we saw rates drop by about a half to 3/5 of a percent, with 30-year fixed mortgages being at about 6.65% this week. 15-year being just a hair over six. And that was kind of on the heels of an excellent consumer price index and produce price index reports, two key reports that really help measure inflation. So what are we going to see as we go through the end of the year? It'll be really interesting to see, to take a look, especially at the CPI report as it comes out in December. Investors and a lot of individuals are hopeful. In fact, just yesterday, the stock market was up about the Dow closed 400 points higher, up about 1.2%. Wall Street is really betting on easing inflation and hoping for smaller rate hikes as well. The unfortunate piece out there is the Fed board did come out and say just last week that they're going to stay extra tough on inflation and not going to stop raising the rates. Why are they doing that, you might ask? Well, perception's reality. And the Fed is really, I think, frustrated that the markets and consumers are staying resilient or staying really bullish despite what's going on out there. So we'll have to see what happens with the next CPI report as it comes out in mid-December, as that's really going to set the stage for mortgage prices and really going to affect housing as well. We still are seeing really not a lot of homes for sale, although about 50% more inventory than we saw about a year ago. So I'd like to know your thoughts on your predictions as far as what inflation is going to do. What's that CPI report going to look like? So feel free to comment below. And as always, if I can ever be a resource, please reach out. Have a great holiday weekend.